Assalamualaikum warahmatullahi wabarakatuh and a very good day. For this slide or for this video, I'm going to focus on tutorial which is July 2022 past year, question 2 on Sion Berhad. This one is focused on PPE topic only. Right? So this question, we go through the question first. Sion Berhad is a company that specializes in the production of housing brick and roof. The company received great demand for its product on 1st of July and 1st of January 2018. All right, so now the date given to you is 1st of January 2018 first. The company acquired the following asset. So now they have two type of asset, which is purchase and building. As we know that purchase and building machine and building, we need to, in order for us to calculate the initial cost, we have to decide whether the cost should be included or not. Right. So for this part, you can see purchase price included, trade discount. We need to minus included, fridge or delivery included, special platform included. Testing included, duties is also included. Duties is import duties. You can see it is based on net purchase price. Net is after minus with trade discount. All right. So building purchase price included, title, search and insurance included, and legal fees is also included. All right. So everything is included here. So there is no trick in terms of giving you item that is not included there. Right. So the company policy to use cost and revaluation model to measure its machine and building. This one I just differentiate the color for machine. Machine is yellow color, and building is a green color here. Blue color is general one. So it is a yearly basis, straight line method. Machine is 10 years, building is 20 years. All right. So you can see it is a yearly basis. What is the difference between yearly basis and monthly basis of depreciation? Yearly basis, it is not based on month. Year of acquisition, regardless of what month, it is considered as full year. Year of disposal, regardless what is the when is the disposal, it is no need to calculate at all. In this question, it is affected because you can see disposal is done on March. So if it is a monthly basis, you need to calculate depreciation for January and February. But now it is yearly basis, so no need to calculate at all at year of disposal. All right. So the question also mentioned on 2nd of January 2021, the company has replaced a new machine component at the cost of 90,000, part of component line, with the old one, which is 60,000, and the carrying value is 42,000. So now the question gives you cost 6,000, carrying value 40,000. The question did not give you accumulated depreciation. But remember how to get the accumulated depreciation? Cost less with accumulated depreciation, we get the carrying value. The question gives you cost and carrying value. So we can get accumulated depreciation by minus cost with the carrying value. So basically, you can see here, cost is 60,000, carrying value is 42,000. If you minus these two, you're going to get accumulated depreciation by 18,000. All right. So the question also mentioned that it is increased. So now we know that the new part is actually capitalized. So the cost incurred is 10,000 for maintenance. Maintenance or any routine is not included, right? So renovate is for building, the renovation is 100,000. So renovation we need to include, right? So other costs mentioned here, annual maintenance, administrative and expenses. This one is normal expenses, operating expenses, expense of. Right, the building revalued to 1.5 million on 5 of January 2022, and a machine was sold for 500,000 on 5 of March 2022. All right, so now we proceed with the question. Discuss the appropriate classification of the machine and building in accordance with MFRS 416 property plant and equipment. So now we see the question asks you to discuss. So this one is just a discussion without calculation. Right. So there is three part of the PPE or 116. You can see, in accordance with PPE 116, it must be used, it must be more than 1 year or more than one accounting period, it must be tangible. So these three criteria to be capitalized as PPE, to be recognized as PPE. Okay. All right. So next, discuss the machine initial measurement and calculate the initial cost of the machine and the building. All right. So there's two questions here. First is to discuss. To discuss is this one. All right. So discuss the special machine qualify for recognition and plan and property and shall be initially measured at the cost. What is the cost? Purchase price. What is the other cost? Attributable cost directly related to the machine, which is in this case is bridge, tax, and installation. Still remember in slide, there is one more, which is estimated cost of removing and dismantling. But that one is not included in here. we just focus on the question. The question did not mention anything about removing and dismantling, right? So that's why the answer is just focus on 1 and 2 only. But if you want to mention, it's okay to mention, but then maybe no marks, all right? So there are the things here. The question asks you to calculate. Now the question asks you to calculate for machine and building. Machine and building both need to be calculated. So machine and building. So in machine here, okay, as per mentioned earlier, so just minus with trade discount, total up everything, including import duties or duties here, with the net. Net is after minus, this one, net. So you get the total, easy lah, right? So with the building, total up everything. So no trick on this part. So there shouldn't be any problem on this part. So we just we just proceed on C. Explain the accounting treatment for the replacement of new machine component and revaluation. All right. So now the question asks you two things here. Explain new machine component, replacement of new machine component and revaluation. So two things now. New machine components and revaluation. The question also asks you to show the necessary calculation. So we need to show the calculation. We need to explain. Right. So in this one, first thing first, the explanation is on machine now. Alright, so for machine, annual maintenance, I mentioned here 10,000, no need. Okay, here is statement of profit or loss as expenses. Depreciation calculated here, no need, 92,000. Later I show you how to calculate the depreciation line, right? So the cost of accumulated depreciation will be derecognized, 40,000. Yeah, the old cost is derecognized, and the carrying value is to be written off in the statement of profit or loss. Why is the carrying value is written off? Because it is a loss, right? It is a loss, 40,000, it is a loss. Because you just throw it out, right? And replace with the new one, all right? So the new component, 90,000, will be capitalized, and as it increase the production capacity. Remember, in our level now, whatever answer, you need to justify your answer, why you answer this and why you answer that, all right? So this is the calculation because the question asks you to show the calculation, all right? So you see here, the cost, which is from the previous question B, accumulated depreciation is calculated times with 3 years. Why 3 years? Because we start purchase on 1st of January 2018 until 2nd of January 2021. So 18, 19, 20. 2021 no need lah because 21 you just begin, right? So only 3 years. So that's why it is 3 years and times with 3 here. So you can see here the total is 255,000. 810 here. Okay, so for next, after you get the carrying value here, minus with the carrying value of the cost that you are going to dispose, and the new component add on because you recognize or you capitalize it, right? Then the depreciation for 2021 is 92,127. How to get this? Okay, this how to get. Basically, we are based on the new one, the new carrying value here, divide by the remaining useful life. Remember, remaining useful life. We cannot use 10 years anymore because now we minus with the old one, we add with the new one. Because there is adjustment to the cost, we need to use the latest carrying value divide by the latest useful life. Latest useful life is 7 years. I mean, this one is remaining useful life. Okay. So this one next is for factory building. All right. So you can see here all the maintenance, admin, and salary all are expense off. Okay. So depreciation, disposition, this one is direct lah. 1 million, the cost you can get from the previous question, divide by 20 years because the question mentioned building is 20 years. So we get the depreciation direct lah. Okay, go to statement of profit or loss. Right. About the major renovation, 100,000, we need to capitalize because renovation we need to capitalize lah. Major renovation. Right. So for the year, now the part is revaluation. So no asset revaluation or ARR to be recognized in 31st December 2021. No, no need to recognize because it is in 2021. Because the revaluation done is in 2022. All right. To show that we know how to calculate, I just show you how actually. So the revaluation to 1.5 million on 5th of January 2022 next year. So for this date, we are going to recognize the ARR by 270,000. How? Okay, this is the calculation. So 1,410,000 less with the accumulated depreciation. Why time with 4 now? Why time with 4? Because the revaluation is on 2022. So the depreciation need to be done until 2021. So 2021 until 2021, eh? So 18, 19, 20, 2021. So it is 4 years. Because this 4 years, so that's why we times it 4 here. All right. So 1,128,000 we get after minus with depreciation. Then we plus with major renovation 100,000. Then we get 1,228,000. So to get ARR, the value 1.5 million less with the carrying value 1,238,000. Then we get the what ARR by 272,000. That's how we get ARR by 270,000 in the answer. Yeah. Okay. Remember ARR is equity. Equity is increase on credit side. Okay. So now D, the question asks you to prepare the relevant journal entry. Now the question asks you to focus on journal entry relate to the disposal of machine and revaluation of the building. So two things lah. The question also asks you to show the necessary calculation. All right. So guys, so this is the answer. I just highlight and explain the answer lah. Okay. So basically all these are from the calculation of C just now. Okay. So this one is just a new one. All right. So the calculation here is for disposal. You can see the selling price is 500,000. The carrying value is 552,763 here. All right. So because you dispose at 500,000, so there is a loss of disposal by 52,763. Right. To do this is just a guideline. If you don't want to follow, then it's okay. So basically, you record credit first machine because you want to write off machine. Machine cost record on credit side because I said decrease on credit side. Then accumulated depreciation, you need to write off also. Okay, you need to write off by credit it. Normally accumulated depreciation you credit. Now because you want to write off, you put on debit side. So that's why it is on debit side. So the original one, 255,810 plus with the new one, 92,127 and minus with the 18,000, the one that you eliminate the old component. Remember just now 60,000 less with 42,000, you get 18,000, right? This one, the old component depreciation. That's why you minus. Okay, then we get 329,937 on debit side. Then the question mentioned it is sold for 500,000. So bank or receivable is 500,000 lah, debit side because we receive, right? So the fourth one is the balancing figure. Balancing figure on debit side, so it is a loss. This one because you calculate, so you know it is a loss on debit side. If you did not calculate, get a balancing figure. If balancing figure on debit side, it is a loss. If balancing figure on credit side, it is a gain, gain on revaluation. Okay. So now all right, so now this one is the revaluation part. Okay, so the revaluation one, okay, you see, this one, the calculation here. All right, so again, the calculation is show already, the revaluation here, how to get the revaluation 272,000. This one is just another calculation, and the current year depreciation. And we get the carrying value for the current year of which 222,000. Right. So again, how to get the current year depreciation? This is the calculation. Okay, this is the calculation. We need to divide by remaining useful life. You can see this one is just a guideline. First thing first, you need to write off or to do the revaluation. We need to write off the building and accumulated depreciation. You see, write off the building and accumulated depreciation. Debit accumulated depreciation. Accumulated depreciation, you can refer to the previous slide. Accumulated depreciation, this one, This one, it show again 280,000. To eliminate this accumulated depreciation, we debit accumulated depreciation and we credit the building. We straight away decrease the value of building itself, right? So you see, once we decrease here, the cost decrease here. So next, we increase the building value by the revaluation amount. So don't forget in the calculation here, we have additional renovation here. Okay, so we increase the value of the building by 270,000 because of the revaluation. Okay, so we get the revaluation value here and then we do a new depreciation. Okay, the new depreciation is this one. How to calculate a new depreciation? This is the calculation. Okay, so basically this is just the guideline. If you don't want to follow the sequence, then it's okay, right? Alright, so that's it, the answer. Alright, so this is just a kata-kata semangat penaikan diri dalam ibadat sehingga kita terlatih untuk buat maksiat. Selamat berpuasa dan selamat berbuka sekarang. Okay, terima kasih.